Okay, good morning, YouTube. Sean from Vesta Live. I'm hitting you pre-market today because I wanted to wait on some news to come through that didn't quite get there. So let's kick this off really quick. It's going to be a very fast one. The markets are opening in about 14 minutes here on the East Coast of the United States. So let's talk about it. We're on episode 31 of our sneak peek for the week, and we've got three topics I want to hit really quick. Coinbase has their earnings coming out. We see Bitcoin really pushing towards new highs, as well as some other cryptos I'll speak to in a second. And then I want to talk a little bit about the so-called Great Resignation, but what it really means and what it's doing to the markets. So let's go quick here. So we have Coinbase kicking off earnings this week. This is going to be one that I think we definitely want to be keeping our eyes on for sure. What's interesting about Coinbase's earnings right now, though, is that it's coming at a really great time for them in a sense that we're seeing all-time highs getting hit in Bitcoin, or at least coming close to being hit within Bitcoin. So it's going to be interesting to see whether or not that's going to be affected. I don't know that I have a great answer for it just yet, but it does feel like with cryptocurrency kind of making that resurgence after we've heard a lot of talk about this idea that maybe we're at all-time highs and they're going to come down. And I don't think we really know yet what's going to happen in that space, but it is an interesting time from the perspective that this earnings is aligning really well to these high prices. Now, to be clear, they're going to report previous quarter earnings, but I think the direction that I'm looking for is what will these new highs do to push the stock further down the road. So just something to be aware of with Coinbase if you own any shares there or something that you're watching. Now, let's jump into sort of the broader perspective here. I also think there's a very big opportunity for Coinbase, and I want to be clear, I'm not recommending a buy here. I'm not recommending anything, frankly. I don't know your personal or financial situation. But what I do want to call out is what I'm hearing is more and more people are looking for ways to get crypto into their 401ks, into their IRAs, into their retirement plans. I think that as the leader in the space, Coinbase is likely to be someone who can probably hit the ground running, partner with other companies to do this. I don't know if this means directly holding crypto or if it's going to be a derivative product or if it's going to be some sort of arm's length ownership. I don't know what that looks like, but I think it's going to be very interesting to see what that's going to do. Because if we start seeing retirement plans open up to be able to hold crypto, and full caveat, I know there are some providers out there who do allow for it, but I'm talking like major name brands in the retirement markets. That's what I'm looking for news. Now, let's just skip over and look at these actual cryptos for a second. We see Bitcoin back in the 65K range. I don't think it's outside the realm of reasonable thought that we could see this thing break all-time highs yet again. That said, it's just as likely it can go the opposite direction. But what I'm seeing is the steadying seems to be staying within this range. This is a good sign. And with Ethereum, we're seeing all-time highs as well. That thing is getting really precipitatively close to 5K. So I'm interested to see what's going to happen there. And I want to call something out too, because this is a really, really great moment to think about how you're looking at your investments when it comes to a space that's not regulated like crypto. YouTube has been bombarded by nonstop, at least in my view, shitcoin videos everywhere, and everyone's talking about how it's going to be 1,000x and 10,000x, whatever the number is. Listen, if you had taken an investment in Bitcoin, if this is something you're comfortable doing and it fits your portfolio, when they was hitting those lows in the past year, you'd be up like 2.5x on your money on a well-known, well-respected asset class, or at least getting more respected asset class. So sometimes when you're chasing, 1,000% returns that may never happen and have huge risk, you miss out on 2 and 3x returns that were relatively reasonable and had the data to back up that thought process. So just something to really think about as the crypto markets continue to become more mature, and you're seeing these prices and these trends, and you're seeing the connections between the companies and the assets. It's something to pay attention to. I said I'm going to keep this short, and I am. Let me hit my final point. We hear a lot about the Great Resignation. This idea that folks, especially in the United States, are retiring, not joining the workforce, trying to stay out of the workforce. You can blame this on politics, unemployment, the pay of jobs, whatever. I don't care. I'm not looking at this from the standpoint of a political perspective or a reason for it. What I'm looking at it as is this is continuing to create a supply chain issue in labor and a tightening of the labor force. So this means that a lot of the areas where we're struggling right now with things like shipping from the ports, getting boats unloaded, getting materials into stores, filling up trucks and getting them driven from point A to point B, and then having someone to work those registers and actually sell those products. I think what we're going to see is a continual real tough shift here on how we're going to get people back into a workforce in a reasonable way to get the economy back pumping again. Now, I know the economy's pumping, but for me, it doesn't have that feeling of being where I want it to be, or at least the right way. It's sort of like we're hitting it with caffeine every day and wondering why it's doing so well. So it's going to be interesting to see what happens from a labor force perspective and how we find ways to get people back into working, back into the jobs that frankly are really needed but aren't traditionally high paid. I think one thing I see every morning as I go to get my coffee is like Dunkin' Donuts right by me is hiring at $14.25 an hour. I'm not delusional in the sense that I think $14.25 an hour is some enormous amount of money, but it's also not the $5.75, $6.25, $7.25 that we've seen for minimum wage in years past. So I think that as competition for labor amps up, I think we're continuing to see a rise, excuse me, a rise in pay or a rise in base rate for a lot of these jobs. I think that's a good thing. I just think we have to think about from a modeling perspective what this means from an economic perspective. Because when we hear about analysts talking about what they're predicting, what the economy is going to come through, what the labor force is going to look at, one of the biggest things we need to also be really aware of is those models are based on certain unemployment rates, certain levels of productivity by employees, certain levels of labor force. If those models that have been designed on past numbers aren't adjusted, we can have wild economic indicators that don't match the reality we're expecting. And I think that for sure, that's something I have my eye on. And things like the CPI rates and the unemployment rates and the labor rates, these are things that I think we traditionally are looking backwards at, and maybe we need to find a new way to do those models. So if you're strong in a way that you leverage indicators or signals, just be aware that those models may not be as accurate as they've been in the past. And that also means there could be opportunity, though. If there's some folks who are out there and raising prices faster than others, maybe they're grabbing the labor, providing better service and a better product, and that's where customers are going to start going. And conversely, on the other side, if you go into a store that has no employees because they can't hire anyone, well, customer services are eventually going to go down there, and maybe I don't want to shop there anymore. Or, frankly, just all things seem to come back to Amazon. Why do I want to go to a store in the first place where I have to wait in lines for 30 or 40 minutes when I can just order it online and have it in my house within 2 days? So just lots of opportunities out there when you look at the labor market and the way it can sort of progress into different ideas and where you want to invest your money. So anyways, I'm going to keep it really short. As I said, Disney's also reporting earnings this week. I'm not really a big Disney investor, so I'm not paying too much attention to that. I'll be curious to see what we get for numbers from the parks and what the impact of overseas parks is. But primarily, I want to see what happens with Coinbase, what kind of news they're going to have, and what this means from a perspective of, are they getting to retirement plans? Are we seeing more crypto being picked up? Are we seeing an increase in people investing on the platform? Those are what I'm looking for. And I'm always keeping an eye on the labor market. So with that, thanks, everybody. Have a good day. It's 6 minutes till the market opens. So good luck today and have a good week. Thanks, everybody.